Guys, here is another episode of market analysis using S.M.C, smart money concept. So this is the easiest way to analyze market using smart money concept in higher time frame. But you can still do this in a lower time frame, but I'm using 4 hours time frame, higher time frame. So we can call this a break of structure. So this is a break of structure, break of structure. Then I'll use my Fibonacci from this high to this low. I want to make sure that this market gets to 50%. You know why? Any break of structure that the pullback didn't get to 50% is not valid. So if this market doesn't get to that place, that means the break of structure is not valid. So that's the 50%. Let me take it again. From the swing high to the swing low after the break of structure. You see, almost. So the break of structure is valid because market gets to 50%. So I'll call that a break of structure. So here I'm going to be another break of structure, and here's going to be what my change of character. So in this case, I'm going to take my sell here, my sell short here, and put my stop loss here, and target what ratio 3. You can do more than that, but I'll focus on ratio 3 or 2 plus. Doesn't matter the ratio, is how consistent. Boom, ratio 3. We did it again. So we've collected that profit right now. So what are we waiting again? We are waiting for another pullback on this trade. Waiting for another pullback. Here's going to be my change of character. The high, the swing high. So here is the present higher high now, and here is the low. Here is the break of structure. Note we are using smart money concepts. So I want to see a pullback. Good. So I'm gonna use my Fibonacci right from this my high to the higher low after the break of structure. So here's the 50%. That's the 50%, and there's one fair value gap. Here's the 50%, and there's a little fair value gap here. So fair value gap here, and there's an other block breaker block here. So I'm going to take my trade. I'm not going to take my trade from this 50%. I'm going to use this other block or this fair value gap. So I'll just use this other block right here and take the trade. So let's see. Let's see how it goes. Stop loss is going to be this swing high because that is the change of character. So I'm going to target a ratio 3. Let's go. Boom. We have 50 TP again. So 2 TP for now. Ratio 3. So here is going to be our change of character now. Here is going to be our change of character now. Presently, this swing high. And it's going to be our entry after this breakout. So I want to see market to reverse, to pull back. So we are going. You cannot call this a break of structure. This is not a break of structure. You know why it's not a break of structure? If you use your Fibonacci from this swing high to this low, you can see the market didn't reach to this 50%. Market didn't get to this 50%. Look, after you get to here and try to pull back, it didn't get to 50%. So you will not call this a break of structure because it didn't get to 50%. So there's possibility that this market will go up again. So once you get to 50%, that's when I'm guaranteed that now we don't have break of structure. But now let's see, the market will pull back. Okay, so we didn't take that trade. See how close it was. See how close it was. Because it's not strong. Because it's not strong. So now this is a break of structure. Or here a break of structure now. So this one was valid. This one was valid. Where is my okay? Yeah, this one was valid, but we didn't take the trade. So that's when market go up again and do another break of structure. You see, 50%. Now this is when market has the main break of structure. So this is where I was supposed to take my trade, but then we miss the setup. So we found another break of structure. So I want to see market pull back to 50%, just like this. Let's see. Good. Let me use my Fibonacci again and check. After the break of structure, market has got to 50%, and there's fair value gap right here. Fair value gap right there. I'll use it as another block. So here is going to be where I'm going to take my shots. Market has already tapped me in for now. So here with my change of character. Yeah, with my change of character right here. My change of character. That's my stop loss. I'm going to target ratio 3. No, we have had another break of structure. Ratio 3. Keep going. Boom. So I'll call this a break of structure because you know why? If I take my Fibonacci from this swing high to this swing low, you can see that this market gets to 50%. So this pullback is valid. So when market go above here, market has done change of character. When market goes above here, market has changed character. So here is going to be my change of character and my another entry. So I'm going to take care of my entry again. Just right here. So here is my entry again. So I want to use my Fibonacci now and check from this swing high to this break of structure. From this swing high to here. See, this is not a pullback. See, market didn't get to 50%, so it's not a pullback. So I want to take my sell right here again. Here is 50%. So all these are not fair value gaps. So I want to take my trade right here again. So let's see when market gets there. Market has get to our 50% and change character. So we are going to take a short from here, and our stop loss will be here. So we will target what ratio 3 again. So let's see. This is USD by 4 hours time frame. The market has done change of character. You can see market has changed character. Where is this arrow? Market has changed character. See, this is change of character. Market shouldn't go above this price. So this is pure change of character. So now I'm not looking at fixed stop loss. So now I'm not looking out for a sell anymore. I'm not looking out for a sell anymore. So I'm looking out for what? A buy. So this low is going to be my demand zone. Since this is a change of character, I'm not going to use my Fibonacci. I'm not going to use my Fibonacci and look out for the 55% again. I'm not going to look out for the premium or discount or whatever. So right now I'm going to demand. This is called demand. I'm going to demand it. I'm not going to look out for my buy for 50%. I'm going to target my buy from this red candle, the last low candle that caused the strong bullish candle momentum. So this is the last red candle on 4 hours time frame. So I want to take my trade from right here. This is I want to take my trade from. So I'm not going to use this 50%, 5%. I'm not going to use it because this is a change of character. It's not a break of structure. So I use 5% Fibonacci when market is just done. When market did change of character, break of structure. But now this is a change of character. It's not a break of structure. So since we are on change of character, so I'm going to use demand. This is where demand and supply are coming. So now I want to buy this market from here. So how do I know this market start selling? There's a break of structure here, and there's another break of structure here. So all these are endorsements. So here is my change of character. I want to buy this market from here. So let's go. Just happen. Market tap inside here and start buying. And there's an endorsement here. So the market has done change of character. This is a change of character. Let me write it down. It's a change of character. So and this is an endorsement. I want to see this market come down again. So market has done change of character. Remember, if market do change of character, I'm not going to target a 50%. I'm going to target the supply zone. So this is here is a 50%, but I want to target the supply zone before I take my sell. So I'm going to target the last supply candles, but I'll use this other block here as my supply zone to demand. See, very simple. So now market has confirmed from here because this is a higher breakout. You can see the higher breakout. So I want to take my buy from here. So I want to take my buy from here, from this other block. It's anywhere here, somewhere around here, to reach this supply zone because there's a change of character for bullish. So let's enter here, put our entry and stop loss right here. I don't give my trade liquidity space because once market wants to go to my direction, I'm not gonna force it, Tap me in. What happened? Market has tapped me in and confirm. So I'm going to take another trade inside this trade now. I'm going to take another trade inside this trade because there's a break of structure. This is to ratio 5. So I'm going to take another one inside there now. I want to take another trade from this low. Let me just use here. Put my stop loss here. My stop loss here. Target this side, this break of structure. Target this break of structure. Got to be a break of structure again. So let's go. Boom, market has tapped me in. Boom, 2 TP smash. 2 TP just like that. See, market has get to our supply zone. It has get to our supply zone. So this 2 TP, we've done with this 2 TP now. So our market has got to our supply zone. What will you do? I'll just sell this market, although the thing has run out. I'll put my sell limit here and my stop loss above, right here. See, that's going to be my stop loss. Right here is going to be my stop loss. And I'm going to target this demand. This the full-time buyer. So I'm going to target this demand zone. Ratio 1, ratio 7. So let's see. So here's going to be what my change of character for it to set to that moment, to that place. So this is supposed to be a change of pattern. If you go to lower time frame, I think this close with body. Well, I'm on 4 hours time frame, so in maybe 1 hour time frame, we should close with body. So look at the change of pattern, and we are going to supply again. Any supply must pull back. You will not use your Fibonacci because it's a change of pattern, so it has to pull down. So we're going to take another trade from here, from this low. There's several gap here. That's why I place this. I don't have to place it here because there's several gap here. So take another sell, another short from here. So this is how I catch all the market move. Quite easy. See, don't you think so? Come on, there. So here's going to be my under entry for sale to do what? To demand. So this is market end. So right now I'm going to be doing what? I'm going to be buying this market. I'm going to be buying it. So I'll mark here as my change of character for the bullish favorable gap here. So I want to buy this market from here. All this will be my supply. I want to buy it from here. My stop loss going to be here. So I want to buy this market from here to this supply zone. Once it gets to here, I'm going to take this short to supply. Then once it gets to demand zone, I'm going to take a buy because the full-time bias is buying. Market did change the parameter here. So that's it. Quite simple. This strategy is S.M.C, smart money concept. That's how I tell you smart money concept. Make profit. Yeah. So I'm going to make another video on gold. Make another video on gold. Make sure you hit the subscribe button for my next post. Thank you.